ready to make your money work harder, beyond just sitting in your savings account. Well, we're going to dive into a YouTube video today that really caught my eye.
Oh, yeah.
It's called Don't Keep Your Cash in the Bank.
Okay.
And then, this is the best part, 6 assets that are better and safer than cash.
Wow.
It's from a channel called Wealth Rebuilds.
I've heard of them.
Yeah, they make a pretty bold claim, right? 6 asset classes that could give you better returns and even protect you against inflation. So we're going to break these down.
Let's do it.
See if their reasoning holds up and pull out some of those examples that really make these alternatives come alive for us.
Sounds good.
So to kick things off, the video starts by basically saying, keeping your cash in the bank, especially with high inflation, it's like watching your money slowly shrink.
It's a losing game, right?
Right.
Because even though you might get a little interest, it often doesn't keep up with the rate at which prices are rising, meaning your purchasing power, what you can actually buy with that money, is going down over time.
Makes sense.
So they're really pushing the idea of exploring other options.
Absolutely. And the first one they bring up, they call it God's money.
God's money. Okay.
Precious metals, gold, silver, platinum.
Right.
They've been stores of value for centuries, but
does that still hold true today?
Exactly. That's the question.
Well, the video makes a big point about scarcity,
Okay.
Unlike those fiat currencies that governments can just print more of, precious metals, there's only a finite supply of them.
Okay.
And that limited availability, they argue, that's what gives them lasting value.
Interesting.
And acts as a kind of shield against, currency devaluation.
That makes sense, actually, because they even throw out some pretty compelling stats. Like gold was around $400 an ounce before the 1950s.
Wow.
Now it's over $2,000.
Really?
And they're predicting it could hit $10,000 by 2032.
That's a huge jump.
Right. But then, gold can be pretty volatile.
True. Very true.
How do you think average investors can, manage that risk,
That's a great question. And the video actually addresses that.
Okay.
They suggest looking into gold ETFs.
ETFs.
Yeah, those are exchange-traded funds.
Okay.
For folks who want to get in on gold without, dealing with the whole physical ownership thing.
So no need to have, a vault in your basement.
Exactly.
Okay.
ETFs basically let you invest in gold through the stock market.
Got it.
So you get more flexibility, easier diversification.
Okay, so precious metals. Check.
Check.
Now let's move on to their second category. Industrial commodities.
All right.
Think silver, cobalt, nickel, copper, all those essential materials used in so many industries.
The video really emphasizes how important these are, right? Their practical uses, like how these unique properties make them essential.
Exactly. Everything from electronics to renewable energy.
Yeah.
And they even highlight cobalt as an example. Because its price has doubled in the last decade, from $20,000 a ton in 2012 to $40,000 in 2022.
Wow, that's significant.
Right, and they connect that directly to the rising demand for electric vehicle batteries.
Which makes sense.
Yeah.
But I wonder, is it really that straightforward?
Yeah.
What other things can affect the price of these industrial commodities?
That's a really good point, because you have to consider things like global supply and demand, geopolitical events, technological advances, environmental regulations.
All playing a role.
So it seems like investing in industrial commodities might come with a higher level of risk.
It definitely can.
So how can investors balance that risk then?
Well, the video lays out a couple of options.
Okay.
For those who are comfortable picking individual stocks, they suggest researching mining companies.
Okay.
The ones that produce these specific commodities,
Makes sense.
But they also mention mutual funds and ETFs that specialize in natural resources, which is a way to spread your investment, diversify across a range of commodities.
Okay, so we've got options, but before we move on, I think we need to address the elephant in the room.
Oh.
Ethical sourcing.
Right.
We've all heard the stories about, questionable practices in the mining industry.
Definitely.
How can investors make sure they're not contributing to environmental damage or human rights abuses?
That's a crucial question. And luckily, there's a real push towards responsible investing these days.
That's good.
You can find resources to help you align your investments with your values.
Okay.
For example, there are ETFs and mutual funds that focus specifically on companies that have strong environmental, social, and governance.
Okay.
ESG.
ESG, got it.
Track records.
So you can invest responsibly.
Absolutely.
Okay, so we've covered precious metals,
Yes.
industrial commodities.
Uh-huh.
Next up, they dive into a world that always seems a little mysterious to me.
What's that?
Currencies.
Oh, currencies. Okay.
Specifically, safe haven currencies.
Yeah.
Like a financial superhero that steps in when things get rough globally.
I like that analogy.
Right. So the idea is that some currencies, often from countries with stable political systems and strong economies, tend to hold their value or even go up when there's global uncertainty.
They're seen as a safe place to park your money.
Exactly.
When things are a bit shaky.
And they give the example of, you guessed it,
the Swiss franc?
The Swiss franc. It seems to defy gravity when everything else is like falling apart.
It has a reputation, right?
Right. What makes it so unique?
Well, Switzerland has been neutral for a long time.
Okay.
They're known for their economic stability and a very sound banking system.
Got it.
So all that together
makes it attractive.
Exactly.
They even mention how the Swiss franc went up against the US dollar in early 2023.
During the Russia-Ukraine crisis.
Yes. It even became a preferred currency for some international trade because of those sanctions on the US dollar.
So if someone wants to tap into this safe haven, is it all about secret Swiss bank accounts?
Well, that's what I always thought, but they actually suggest something a little more accessible. Currency ETFs.
ETFs again?
Yeah, they can track the performance of the Swiss franc or other safe haven currencies.
Okay, so a way to get exposure to the currency market without
having to be a Forex trader.
Got it. Much simpler.
So we've got precious metals, industrial commodities, safe haven currencies.
3 down.
3 down. Let's move on to their next category, which is government securities.
Government securities.
And they start off by talking about that phrase on the US dollar.
Which one?
This note is legal tender for all debts, public and private.
Oh, right.
It really makes you think about the role of government backing when it comes to money.
It does.
Right.
Because they're essentially saying fiat currencies, they're not backed by gold anymore. It's all about the full faith and credit of the government.
But relying on the full faith and credit of a government, doesn't that seem a bit risky?
You're right. There's definitely risk involved.
Right.
And the video even uses the Greek sovereign debt crisis as an example.
Oh, right. Back in 2009.
Exactly, to show what can happen when governments struggle financially.
So where do government securities fit into all of this? What are they exactly?
They're basically presented as a relatively safe option.
Okay.
Particularly those issued by, stable governments.
With good credit.
With high credit ratings, yes.
Like in the U.S., you have treasury bills, notes, and bonds.
All considered low risk because they're backed by the U.S. government.
But are they worth considering if you actually want to see your money grow?
Well, they typically offer higher interest rates than a regular savings account.
Oh. Okay.
So if you're looking for a relatively safe way to earn a return, they could be a good option.
So like a step up from savings accounts in terms of potential returns.
Exactly, but still on the lower end of the risk spectrum.
Got it.
Which can be a good thing for some investors.
Okay, so that's 4 down, 2 more to go. Next, they tackle something a lot of people associate with investing. Stocks. But not just any stocks. They specifically focus on value stocks.
Value stocks are.
And they make a distinction between those and growth stocks.
Okay.
Emphasizing that value stocks represent companies with strong fundamentals.
Solid company.
Right, a proven track record of profitability and often a history of paying dividends.
So they're arguing that value stocks can be less risky than growth stocks.
Exactly, because growth stocks tend to be more volatile.
More speculative.
Right.
But how do you even identify a value stock?
That's a good question.
Seems like it would take a lot of research.
It does, and they acknowledge that, which is why they bring up dividend-focused mutual funds as a way to kind of simplify the process.
Makes sense. So instead of analyzing individual stocks, you let the professionals handle it.
Exactly.
They pool money from multiple investors and create a diversified portfolio of these dividend-paying stocks.
They even highlight a specific example.
Which is?
The Vanguard High Dividend Yield Index Fund Admiral shares.
Okay.
But don't mutual funds also come with, fees and potential risks?
That's true.
Yeah.
They do have management fees, and their performance can fluctuate, depending on what the market's doing and how those underlying stocks are performing.
Right.
So it's always important to do your research before investing in any mutual fund.
Okay, so due diligence is key, as always.
Absolutely.
Okay, 5 asset classes down. leaving us with one last category to explore.
What's that?
Real estate.
Real estate, the classic.
And they start off by saying that land is a non-depreciable asset.
Meaning it doesn't lose value over time.
Right. Unlike most other possessions,
Okay.
they connect this to the concept of scarcity. Land is finite.
Mm-hmm.
And as populations grow, economies expand, the demand for land just keeps going up.
Driving up the value.
Exactly. They even mention how housing prices have generally been on an upward trend for decades.
Even with that housing bubble back in 2008.
Yeah, exactly. But isn't real estate also a really illiquid asset?
True.
It's not like you can just sell a piece of land or a house overnight.
It takes time.
Right.
And there are costs involved.
Which is why they highlight an alternative
Great.
for those who want exposure to real estate without the hassle of actually owning property.
What is it?
REITs.
REITs? Okay.
Real estate investment trusts.
Like mutual funds, but for real estate.
Exactly.
Okay.
They allow investors to pool their money and invest in a diversified portfolio of properties.
Without having to deal with property management.
Exactly.
That's pretty appealing.
Right. And they specifically mention Ventus Inc.
Ventus Inc.
as an example, which is a REIT focused on healthcare real estate.
Interesting. So it could potentially benefit from, like, the aging population.
Exactly.
And the increasing demand for healthcare services.
Right. So we've now gone through all 6 asset classes that the video presents.
Wow. Quite a list.
As alternatives to just holding cash in the bank.
It is. And what's really standing out to you from all of these? What are you most curious about?
Well, stay tuned because in the next part of our deep dive,
yes,
we're going to revisit each asset class in more detail, dig deeper into those potential risks and rewards, and give you some practical tips for actually incorporating these alternatives into a well-rounded investment strategy.
Wow. Sounds good. Can't wait. Welcome back to our deep dive. So let's pick up where we left off and dig a little deeper into those 6 asset classes. Starting with precious metals. We talked about gold ETFs as a way to get involved without actually holding physical gold. Can you break that down a little?
Yeah, so ETFs or exchange-traded funds, they're kind of like baskets of assets that you can buy and sell on the stock market, just like you would with a regular stock. So instead of needing a safe to store all those gold bars, you can buy shares of a gold ETF.
Okay.
Which tracks the price of gold. So
it's a more accessible way to get exposure to precious metals.
Exactly. Plus you get that liquidity and diversification that comes with ETFs.
Makes sense. Now, switching gears to industrial commodities, we mentioned how complex investing in this space can be. So how can investors make smarter choices when it comes to things like mining company stocks?
Well, research is key. You really want to dig into the companies themselves.
Okay.
Look at their financial health, their track record when it comes to responsible sourcing.
That's crucial.
And how much they're actually exposed to specific commodities. So it's all about understanding the company behind the commodity.
Due diligence is essential. All right, moving on to safe haven currencies. We talked about how the Swiss franc tends to stay strong during uncertain times. But are there any downsides to investing in a currency like that?
That's a good question. While the Swiss franc has that reputation for stability, it's not immune to fluctuations,
True, just like any other currency. And things like interest rate differences between countries and the overall global economic climate can impact those changes.
Right, no investment is completely without risk.
Okay, let's talk about government securities. We mentioned U.S. Treasury securities, like bills, notes, and bonds. How do they differ from each other? And what kind of returns can investors expect?
So they mainly differ in their maturity dates and interest rates. Treasury bills have the shortest terms, typically less than a year, while Treasury bonds have the longest, ranging from 10 to 30 years.
So longer terms, higher interest rates.
Generally, yes. But it's important to remember that those rates can change over time.
Of course, because interest rates are affected by all sorts of factors like inflation and what the central banks are doing. All right, let's move on to value stocks. You brought up dividend-focused mutual funds as a way to simplify investing in this category. Can you explain how those funds work?
Sure. Dividend-focused mutual funds basically pool money from a bunch of different investors and then use that money to invest in a bunch of companies that are known for paying dividends.
So they're actively managed.
Exactly. There are professionals who pick those stocks aiming to provide consistent dividend income to the investors in the fund.
So it's a way to diversify your portfolio?
Yep, and potentially benefit from both those dividend payments and any increases in the stock prices.
Sounds good, but diversification is still key, right?
Absolutely. Even within a specific category like value stocks. All right, now let's get back to real estate. We talked about REITs as an alternative to directly owning property. What are some of the pros and cons of going the REIT route? Well, one of the biggest advantages is accessibility. REITs allow investors to get into the real estate market without needing a ton of money up front or dealing with all the headaches of actually owning property.
Right.
Plus, you get diversification by investing in a mix of different types of properties, like commercial real estate, residential, healthcare facilities, that kind of thing.
Sounds pretty good, but I'm guessing there are some downsides too.
Of course, REITs stay subject to market ups and downs, so their values can fluctuate.
So they're not completely immune to risk.
Exactly. And it's worth noting that REITs are traded on stock exchanges, so their prices can be swayed by, market sentiment and the overall economic climate.
Makes sense. Now, circling back to our final asset class, collectibles, the video showed some pretty impressive examples, like that vintage Mercedes selling for millions. But how does someone even begin to approach collectibles as an investment?
It's a fascinating world for sure.
That is.
But it's definitely complex and pretty subjective.
How so?
Well, the value of collectibles often goes beyond just, what they are. It's about rarity. Historical significance, cultural impact. It's not just about owning something cool looking.
Right.
You need to understand the market, know what collectors are actually looking for.
You mentioned platforms like Whatnot for buying and selling collectibles. Can you tell me more about how those platforms are changing things?
Yeah, so platforms like Whatnot are making collectibles more accessible to a wider audience.
Okay, how so?
They provide a platform for buying, selling, even live auctioning.
Wow, live auctions, interesting.
And they often focus on specific categories like sneakers, trading cards, vintage toys, that kind of thing.
So there's something for everyone.
Exactly.
Right.
And they're creating a more transparent, liquid market for these items.
So both experienced collectors and people who are new to the game can participate.
Exactly.
Yeah.
It's pretty cool to see how technology is changing the way we invest in and engage with collectibles.
Definitely. So we've now gone through all 6 asset classes, highlighting the potential benefits and risks. What key takeaways should our listeners remember as they explore these alternatives?
I think one of the biggest takeaways is that there's no magic formula.
Right.
It's not about blindly jumping into any of these asset classes.
It's about doing your research.
Exactly. Research is key. You need to figure out which options align with your financial goals.
And your risk tolerance.
Exactly. It's about making informed decisions, not just following the latest trends or what everyone else is doing.
And it's a continuous learning process, right?
Absolutely. Because the financial world is constantly changing, so staying curious and informed is so important.
So where can listeners go from here? What resources would you recommend if they want to delve deeper into these alternatives and maybe start building a more diverse portfolio?
There are so many great resources out there.
Yeah.
You've got reputable financial websites, investment publications, even podcasts like ours can provide valuable insights and educational content.
And don't forget about books.
Oh, yeah. There are so many good books by financial experts that can help break down these concepts and give you practical advice.
And what if someone wants more personalized advice?
Then I would definitely recommend talking to a financial advisor.
Right, they can help create a customized investment strategy based on your specific situation.
Exactly, especially if you're new to investing or just feeling a little overwhelmed by all the choices.
Good point. So as we wrap up this deep dive, what's the one thing you hope our listeners will take away from all of this?
I hope they feel empowered to take control of their financial future. There are so many options beyond just those traditional savings accounts.
It's about opening up to new possibilities.
Exactly, and it's never too late to start exploring.
Well said. Investing doesn't have to be scary or only for the wealthy.
Right. It's about taking those steps, big or small, to build a more secure and fulfilling financial life.
Absolutely. Well, thanks for joining us on this deep dive into alternative asset classes.
And until next time, keep learning, keep exploring, and keep making those smart money moves.
Welcome back for the final part of our deep dive. We've covered so much ground exploring those 6 alternative asset classes from that YouTube video.
It's been quite a journey, hasn't it? Precious metals, industrial commodities, safe haven currencies.
Government securities, value stocks.
Even collectibles.
Yeah.
It can feel overwhelming with so many options.
It can, but I think that's actually a good thing.
Oh, why is that? Well, it just highlights how many possibilities there are for building a truly diversified portfolio.
That's a great point. It's not just about sticking with the traditional savings accounts and stocks.
Exactly. And we've seen how different asset classes can play different roles in a portfolio.
Right. Offering different levels of return and ways to manage risk.
Absolutely. It's about finding that right mix for your own situation.
Tailoring it to your goals and how much risk you're comfortable with.
Exactly. Aligning your investments with your overall financial vision.
And making sure your portfolio reflects your values and what you want to achieve.
And speaking of values, we talked about ethical considerations, especially with things like industrial commodities.
It's great to see that growing emphasis on ESG investing.
It is. Investors are realizing they can make a positive impact with their money.
And still seek those financial returns.
Exactly. And beyond aligning with your values, it's also about knowing your own risk appetite.
Right, because some of these asset classes like collectibles or those industrial commodities, they can be more volatile.
Definitely.
And then something like government securities or certain types of real estate.
Right. And that's where research and due diligence becomes so important.
Absolutely, like we talked about.
You've got to research those individual companies, understand how those markets work, really weigh those risks and potential rewards before you jump in.
It's about being informed, not just following the crowd.
Exactly. And it's a journey of continuous learning, right?
Absolutely. The financial world is always changing.
So you've got to stay curious and informed.
Couldn't agree more. So for our listeners who want to learn more, where should they go from here?
Well, there are tons of resources available, both online and offline.
Like?
Reputable financial websites.
Okay.
Investment publications, even podcasts like this one.
Of course. Got to plug the podcast.
Right. And don't underestimate the power of books.
Oh, yeah. So many great books out there written by experts.
Exactly. They can demystify investing and give you practical guidance.
And if someone wants more personalized advice,
definitely talk to a financial advisor.
Makes sense. They can help you create a plan that's tailored to you.
Especially if you're new to investing or just feeling overwhelmed by all the choices.
So as we wrap up this deep dive, what's the one key message you hope our listeners take away?
I hope they feel empowered to take control of their financial futures.
Yes.
There are so many options out there beyond just those traditional savings accounts.
It's about being open to new possibility.
Exactly. And it's never too late to start exploring.
Well said. Investing doesn't have to be scary or something only for the wealthy.
It's about taking those steps, no matter how big or small, to build a more secure and fulfilling financial life.
Absolutely. Thanks for joining us on this deep dive into alternative asset classes.
And until next time, keep learning, keep exploring, and keep making those smart money moves.